What is a capital raise? Understanding the fundraising process. Introduction. In the world of business and finance, companies often require additional funds to fuel their growth, expand operations, or launch new initiatives. One common method employed to secure these funds is through a capital raise. This article aims to demystify the concept of a capital raise and shed light on its significance in the business landscape. Defining capital raise. Capital raise, also known as fundraising or financing, refers to the process of acquiring funds from investors or financial institutions to support a company's operations, projects, or expansion plans. It involves raising capital by selling equity, issuing debt, or utilizing a combination of both. The primary objective of a capital raise is to generate the necessary resources to achieve the company's strategic goals and drive its long-term success. Methods of capital raise. Equity financing. In equity financing, companies sell a portion of their ownership in exchange for capital. This approach allows investors to become shareholders and participate in the company's profits and growth. Common forms of equity financing include issuing shares of stock, selling equity to venture capitalists or angel investors, or conducting initial public offerings, IPOs, to raise funds from the public markets. Debt financing. Debt financing involves borrowing money from lenders or issuing debt securities with the promise of repayment over a specified period, typically with interest. Companies can secure debt financing through bank loans, corporate bonds, or other debt instruments. Unlike equity financing, debt financing does not dilute ownership or grant investors ownership rights but entails regular interest payments and repayment of the principal amount. Hybrid financing. Some capital raises combine elements of both equity and debt financing. For example, convertible debt allows a company to issue debt instruments that can be converted into equity at a later stage, providing flexibility to investors and potential upside for the company. Mezzanine financing is another hybrid option that involves a mix of debt and equity, typically used to bridge the gap between senior debt and equity financing. Significance of capital raise. Business expansion. Capital raise provides companies with the necessary funds to fuel growth, expand operations, enter new markets, develop new products, or acquire other businesses. It enables companies to invest in research and development, upgrade infrastructure, hire more employees, and enhance their competitive position. Risk mitigation. Adequate capitalization plays a crucial role in mitigating risks associated with unforeseen challenges or economic downturns. By raising capital, companies can build a financial cushion to weather market fluctuations, sustain operations during difficult times, and maintain their long-term viability. Attracting talent and partnerships. A successful capital raise can enhance a company's reputation and credibility, making it an attractive proposition for potential employees, strategic partners, and suppliers. A well-capitalized business demonstrates stability and growth potential, making it more likely to attract top talent and forge beneficial partnerships. Innovation and research. Capital raise empowers companies to invest in innovation and research initiatives, which can drive technological advancements, product development, and operational efficiencies. By allocating resources to these areas, businesses can stay ahead of the competition and adapt to evolving market dynamics. Conclusion. A capital raise is a pivotal process in the business world that allows companies to secure the funds necessary for growth, expansion, and achieving strategic objectives. Whether through equity financing, debt financing, or a combination of both, companies can tap into various sources to attract investors and lenders. By successfully raising capital, businesses can bolster their financial position, attract talent, and position themselves for long-term success in a dynamic and competitive marketplace. Thanks for watching.